Hello everyone, welcome to yet another weekly analysis. Now, there are some things I'm going to say on here. For example, about last week's video on USD card. So USD card was wrong, and I'll say why. Because on here we're all learning, right? So USD card was very very wrong, and I'll say why it was wrong. Because now there's something you need to understand, right? There's something you need to understand. There is a cardinal rule. There is a rule that cannot be broken. You see what I'm saying to you, which is trading a trend. It cannot be broken. There's nothing more. There's no rule that is more special in trading than trading a trend, right? Now, in trading the trend, it is easy to know the direction of the market. It's very easy. All you have to do is go to the monthly time frame, and you can see the overall flow of the market, right? Now, the second thing I'm going to say is this: the chart patterns from the weekly time frame, they are very important. You see what I'm saying to you? The chart patterns from the weekly time frame, they are very, very what important, very, very right. So this is what I say, right? So I'll show you this. There's something I'm gonna do. I'm gonna take these off. 1 minute. I'm gonna take these off, and it is important to understand that the tools, right, the support and resistance lines, the tools, they do not tell us the direction of the market, right? They do not tell us the direction of the market. Now, if you look at the market right now on the monthly time frame, it is easy to spot that we are highly bullish. It's easy to spot that we are bullish, right? I understand that the markets have come here. It's in a range. It's basically almost in a range. Come here, up, down, up, down, up, down. It's something to you, but you need to understand that we are what a bullish market. I would be. It's not even about being scared or letting money, leaving money on the table. It's about trading the most probability setup. It's about trading the highest probability setup. It's about looking for that one setup, that one pair that has the higher probability or highest probability to give you a return. You see what I'm saying to you? There are tons of pairs. There are a lot of pairs out there. A lot of pairs out there. It's something to you, but it's important to be able to sift through and find the one that would be better for you. Find the one. You see what I'm saying to you? Find the one that would, reduce your losses. Now, there's something I'm going to say. I'm going to apologize first of all, first and foremost about the wrong information. We're not bearish. We're not looking to go down. We're looking to go up. Now, I will tell you why. Because I'm not just going to say, oh, this was wrong, and then not tell you why. I'll tell you why. Right now, on the markets right here, we can all see, right? We can see that I have areas marked out. It's something to you. I have prices marked out. Now, all of these prices right here, these are turning points in the market. Support and resistance. I was reading the candlestick Bible again this morning, right? I woke up 6 a.m. I took up my book, and then after I finished reading Daily Laws by Robert Greene, I picked up the candlestick Bible. My spirit kept telling me, study study, go through the candlestick Bible. There might be something that you are missing, and I went through it, and there was a certain point I was missing. When you go on to the weekly time frame, for example, right, and daily time frame, these prices I have marked here, these prices here, these are turning points in the market. Because why? They were gotten off of other turning points in the market. So support and resistance are basically turning points in the market, and that was the word that was the and the that was the word I was looking for. I needed to understand that. So when I started seeing this double bottom around here, right, and obviously we broke the counter, we broke the neckline, and then it became a very sufficient double bottom, right? I was I was quite I was still biased that we are going to drop. Meanwhile, the markets were already, at a turning point. The only difference between this price right here, that is, a thin line, and this one that's a bolded line, that the bolded line, is the fact that it is bold, it is bold, and this one is thin. There's no difference between this line and this line right here. You see what I'm saying to you? So these prices right here I have here, these are support levels, resistance levels. It depends on how the market is moving, and these are turning points. It is very important to note these are turning points in the market. So we came to a turning point right here, and I did not know what to do. You see what I'm saying to you? But I am glad now I know. It's very important because I took two losses right here. I took two was special losses right here, and I was quite confused because I did not know why I was taking these losses, but now I do. And the second reason why it was wrong to look for sales was because on the monthly time frame we are actually bullish, so I should be looking for buys. It was Christmas for me. Christmas came early when when this double bottom was forming up and it broke the neckline. That was when Christmas came early. And obviously, when we've broken the neckline, I will be looking to buy at the retest of the necklines from the daily time frame, from the 4 hour time frame, all of that. I was quite I was just blinded to the fact that we were at a turning point. I was blinded to the fact that I did not know what I was looking at in that moment. And that is why we take losses, right? That is why we learn from our losses, right? Because then we know what we are looking at. By the time you've taken 2, 3 losses, you would ask yourself what's going on because you keep making the same mistake every time, right? And that's my transparency, and that's what I wanted to say from the beginning, right? So moving forward, I have some juicy pairs. Moving forward, right? USD card is bullish. USD card is bullish. We're looking to keep on pushing to the upside, but I need to see a retest. Yes, yes, yes. The USD card, I need to see a retest into this level sometime. I need to see a retest, and then we can start looking for buys from these turning points in the market, right? So for now, it's not ready. For now, it's not ready now, but I have something else to say on Euro USD and Usdjpy, right? So now, remember when I said something about turning points in the market, right? On USD card, right? Now, if we take the same analogy and bring it back here, we would find out that we are rejecting from a turning point in the market, right? And if you look to the left hand side, you can see that this is a double bottom, this is a double top rather, on a weekly time frame. This is a turning point in the market. This area right here is a very, very special or turning point in the market. So it is possible that when the weekly time frame comes here, it could shift the trend of the market on the weekly time frame. When the weekly time frame comes here, it is possible the market could easily what plummet to the downside. And if you notice, right, if you look all the way down here, right, this is a turning point in the market. Right here is a turning point in the market. Right here, right. And if you notice, by the time the market came into this level, that was when that was when the bearish move started. Because why we coming into turning point in the market, right? So it is important to know now what I'm doing right now on the Euro USD. I'm looking to sell. Yes, yes, yes. I'm looking to sell because, like I said, the cardinal rule on here with top down analysis is that we sell or we buy in the direction of the monthly time frame. The monthly time frame is very structure wise. Do not use tools as sources of your direction on the market. Straight, market structure, straight, price action, right? I'm looking to what? Sell. You see what I'm saying to you? I'm looking to sell. Now, these areas right here, these are basically turning points in the market. So it's very possible that whenever the market comes into one of these levels, it could shift the structure of the market. It could shift it. It could have a play. It could have a role in turning the direction to the other side. You see what I'm saying to you? Now, let me show you something else, right? Now, if you notice right here how the Euro USD, right? Euro USD basically rejected and formed a double bottom. That's one thing. Whenever you see double bottoms forming on the weekly time frame, the weekly time frame we come to look for chart patterns. We come to look for double bottoms and double tops, areas where the markets are from double tops and double bottoms and has caused a reversal. Now, this place does not just reverse in thin air. The market does not just reverse for reversing sake. No, it has gotten to a turning point, and that was why it reversed. Now, if you notice right here, you can see that this place is a turning point in the market, right? Came with lower low, lower high. This place is a turning point. And basically, when it came into this place, it also caused what? A reversal. And if we go on the daily time frame, I can promise you that there is a double top right here on the daily time frame that is possible that will cause a reversal. So this was something I needed to understand, whilst I was, trying to understand why I was taking, these losses, why I was, seeing a reversal from nowhere in the market, right? So that was, and I'm glad to God, and I thank Him that I'm able to understand what I needed to understand from the onset, right? So on Euro USD. Now, I am anticipating the reversal. Now, this is the reason why I am looking to sell Euro USD. This is the main reason. The main reason, first of all, is I am going to be selling in the direction of the monthly time frame. That's the main reason. That's number one. That's the cardinal rule. The second reason is because I am looking to sell into the left shoulder. Now, whenever I keep saying this, I've said this a million times in the former videos, right? Whenever you see a sheet of structure like so, higher high, higher low, higher high, it comes and creates a lower low, a head and shoulder movement, it will come and retest the left shoulder right here, not here. Most people stop here and then they take losses because the market will respect. There's one thing you have to know. The market respects areas. It respects. But would that area be responsible for the turning point, for the overall, for the for overruling that move? No, it would not be responsible for the movement, but it will be responsible to create a diversion. See what I'm saying to you? But moving forward, right? We'll come and retest the left shoulder, and that is how we'll drop all the way to the downside, anticipating the reversal. Now the same thing here, lower low, lower high, lower low, right? It came and put in a higher high here. This was when we broke structure. This candle right here. See this bullish candle up to the upside. That was when we broke structure. Now we went to go and now I'm glad because we've come into what around psychological 1.9, 1.19000. So you can see that these are not just radical areas or random areas. These areas are quite reactive. These areas are catalysts. These areas are round psychological numbers. These are bank levels, right? So the market has come and it has touched this area, and now it could well be possible that this could be the reason for a turning point. This could be a turning point in the market. So I'm expecting things like this to happen. You see what I'm saying to you? So on Euro USD, right, we're expecting a pullback into the left shoulder and then a drop to the downside to retest this left shoulder that caused this bullish move. You see what I'm saying to you? So it's basically the same thing, rinse and repeat. There's nothing special, there's nothing difficult about it, there's nothing hard about it, right? We broke structure. I know. I've always known. It's a rule for me. This is basically my second cardinal rule, right? It's a rule for me that whenever we break structure, look with a head and shoulder pattern, we have to come to retest the left shoulder. And now I am anticipating that I would sell into the left shoulder. Now, luckily for me, instead of a double top, right? Instead of a double top and a break of the neckline, we are having a head and shoulder pattern again. So I'm not going to utilize the head and shoulder pattern. Now, if it were just like a double top, I would sell at the break of the neckline, simple, or a retest, and that's done, right? But it is giving us a left shoulder, and then we can anticipate the retracement into this left shoulder and then sell to the downside. Now, there's something else I'll say. The only way I would be able, or the only way I would sell when we get here is when the DXY has gotten there. Now, this is where the DXY comes in. The DXY is the dollar index turned, is the Euro USD turned upside down. So the DXY is basically the US dollar, right? So before the GBP USD will make a move, before the Euro USD will make an important move, if the DXY and the Euro USD have to come and fulfill particular and the same particular prices at the same time, the DXY would have to be the one to lead the movement. You see what I'm saying to you? The DXY will have to be the one to lead the movement. So I'm expecting the DXY also to come and retest this level. The DXY is Euro USD turned upside down. So the same thing that happened on the Euro USD, I'm expecting to happen on the DXY. But the DXY always takes the lead. Now, the Euro USD might get to the left shoulder before the DXY, but it will not move until the DXY fulfills its levels. That's how important the DXY is for me and for you as well. So the plan is this: to wait for the DXY to get here, and when it does, then I'll start looking for what entry signals on the Euro USD. You see what I'm saying to you? That's the plan. If that does not happen, no trade. It's simple as ABC. Our trading plan, I was telling somebody the other day, our trading plans are not there to stop us from, taking money off the table, stop us from making more profit. No, 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 stop us from, or make us leave money behind. No, no, no. Our trading plan helps us to stop taking losses, unnecessary losses. You see what I'm saying to you? There are losses that cannot be controlled, and there are losses that can be learned from to stop taking unnecessary losses. You see what I'm saying to you? So it's very important to note this, right? It's very important to know this. The only thing that kept, like I was saying the other time, right? The only thing that shows impact in a portfolio is not profit; it is losses. By the time you've taken, minute consecutive losses, excuse me, at the end of the day, it is going to be colossal, and that is going to be detrimental to your what, to your capital, to your portfolio. But if you keep taking, minute profits, minute profits, minute profit, it does nothing to your account but increase. It does nothing to your account but increase. But when you keep taking minute losses and it's going to be colossal, after in a certain period of time, and your capital is gone, you are basically left naked with nothing. You cannot trade without capital. It is important, so you cannot lose your capital. So on here, we do not even try to make money. We try to manage our money. We try to manage risk. That is what we do on here, and that is the mind. That is the psychology behind forex trading. It is not about money. It is never about money. Money comes last. That is why whenever you're trying to find out what lot size you use, what do? You don't, first of all, you don't use your, when you go on your a losses calculator. What do you put in there? Do you put in your take profit? No, you put in your stop loss. So it's important to notice. Managing risk is the first thing to know. So moving forward, USGPY is basically textbook. On the monthly time frame, we are bullish. Structural wise, we are what? Bullish. Higher highs and higher lows, right? Higher highs and higher lows. There is nothing special about it. Higher highs, higher lows, higher highs. Now we are coming to put in a higher low, and I'm seeing a double bottom. This looks like a double bottom, but it is not a double bottom until we break the neckline, until we close above the body. You have to body close above the neckline. Then it's a double bottom, and then we can anticipate more buys from above, right? So for now, we are in this zone. We are trading in this, in this range, and then we'll focus on this range, right? So the USDJPY, it's bullish. We're anticipating, a push to the upside. Now, there's something I'm going to say on the USDJPY. I've marked out my weekly take profit. Whenever the market gets into a weekly take profit, that is when profit taking starts, and that is why you see, you know, I will not be buying above here. I will have to wait for the market to at least retrace into this level again, Fibonacci style, and then push to the upside. Because when people get here, they keep buying. I've been a victim of it. You get here, you keep buying, not knowing that the market has to oscillate. It has to recombobulate. It has to go back and retrace, and then give an impulse again. But then you get caught in the retracement and start buying the retracement, thinking it should be going up forever. You see what I'm saying to you? So on the weekly time frame, there's nothing to see here yet. But on the weekly time frame, the moment we break this structure, I tell you, the moment we break this structure, I would be anticipating a retracement into the left shoulder. Excuse me, I will be anticipating a retracement into the left shoulder to keep buying. But for now, all we are doing right now is to look at the daily time frame. That's what we're doing right now. On the daily time frame, and you can see that the Euro USD is basically moving directly inversely proportional to the USD JPY. You see what I'm saying to you? And it's also moving proportional to the what? To the DXY. So on the USD JPY, I will be anticipating a retracement into this level, into this price 148.500, into this level, and then buy to the upside. So first of all, we need a retracement, and then we'll look for buys. But for now, there is nothing to do. I would not be surprised if there were no trades next week. You see what I'm saying to you? So I am open not to trade. I am fine with not trading, because I know that with what I do, with the way we trade on here, it is long term. It is not getting out, getting in today, getting out tomorrow. It is about reducing my risk. And the only way to reduce your risk really is about not is the only way to reduce your risk is not entering trades unnecessarily. You see what I'm saying to you? By the time you take 2 trades, 3 trades in a month, you've basically exposed yourself 3 times. And after that 3 times, you may lose all of them. You see what I'm saying to you? I am thinking, I am trying to reduce how many times I trade in a month. 2 trades in a month is perfect for me, because it takes weeks. It takes a week or two for a setup to come my way. So look for example, on USGPY, it might take the whole of next week for us to retrace into this level for buys. You see what I'm saying to you? So then if you take another 1 or 2 weeks to get to take profit, you see what I'm saying? So in that manner, I've traded in 3 weeks. I might have traded once or twice. You see what I'm saying to you? It depends on the analysis, or depends on how fast the market retraces. So now I've exposed myself to 1 or 2 risks, and then say, if I follow my trading plan with execution properly, I'd have profited in both ways. And say, 2 trades, I risk 1% in both of them, and I profit at least a 2 to 1, and I'm up 4% for the month. That's perfect. With $1 million account, bruv, I am balling. I am living the life. You get me? So you do not have to stress yourself with trading. All you have to do, in fact, the bigger your account, the lesser you have to, be involved in the market. That's what I think. You see what I'm saying to you? With $1 million account, I should not be looking to. You see what I'm saying? I should not be looking to be involved in the market. No. You see what I'm saying? I'm not saying I move the market. I'm not saying my little $1 million is what's going to be moving the market. But it is important to know that I cannot be as I cannot make myself available to risks unnecessarily. Everything on here is a risk. You see what I'm saying to you? It's a risk. We are not certain about the market, but we have plans that can help us, maneuver, meander, away from unnecessary losses, meander from the traps of the market, because the market has traps set up. The markets don't know where your